All right, let's get right into it. Today, we're digging into the one question that seems to be on every investor's mind. Is this incredible, AI-driven stock market a genuine breakthrough, or are we all just living in a massive bubble that's about to pop? Let's decode the signals together.
So, is this it? You've seen the headlines, right? You've probably felt that little bit of anxiety yourself. I mean, when you see charts going practically vertical, it's totally natural to start wondering, okay, when's the drop coming? But hold on, not everyone is buying the bubble story. Take this quote from Tom Lee over at Fundstrat. He's making a really powerful counterargument here. He's saying the market isn't frothy or overheated at all. In fact, he thinks we're just in the middle of a healthy cycle. So what makes him so sure? Let's look at the data he's pointing to.
$7 trillion. Let that sink in. This is the first huge piece of the puzzle. It's the amount of cash that big, institutional investors are just sitting on the sidelines. Now, what does that tell you? It screams caution. If this were a real euphoric bubble, that money wouldn't be on the sidelines. It would be thrown into the market chasing returns. So this is a pretty clear sign we're not at some crazy peak.
And it doesn't stop there. Here's the second piece of evidence. For 29 straight months, a record, by the way, the U.S. manufacturing sector has actually been contracting. Think about that. When businesses are pulling back and not making huge investments, it tells you the economy isn't running too hot. This just doesn't fit the classic picture of market top. So let's build on that. Let's really make the case against a crash and focus on why the underlying fundamentals are so incredibly important right now. And this slide just lays it out perfectly. It's a tale of two markets. On one side, you have the fear that you read about everywhere. It's all just speculative hype. It's driven by FOMO, fear of missing out, and a crash is right around the corner. But the reality, when you look at the data, points to something very different. A market that's mid-cycle, powered by that cautious capital we just talked about, and supported by seriously strong fundamentals, especially when you look at the real earnings and innovation coming out of U.S. tech.
And that brings us right to the engine room of all this growth, artificial intelligence. But, we're not just going to talk about the flashy apps everyone sees. We're going to go a layer deeper and look at the unseen powerhouses, what investors call the picks and shovels of this whole AI gold rush.
So what on earth is a picks and shovels strategy? Well, it's simple. Think back to the California gold rush. Who got rich? Sure, a few lucky prospectors struck gold. But the people who made the most reliable fortunes were the ones selling the picks, the shovels, the jeans, the wheelbarrows. They sold the essential gear to everyone. In the world of AI, this means investing in the core fundamental infrastructure that every single company needs to build their AI dreams. So let's put some real names to this strategy. We're going to look at three of these foundational picks and shovels companies. You've got Micron, which provides the critical memory backbone. Then there's AMD, the up-and-coming challenger in high-performance chips. And finally, Alphabet, Google, the quiet pioneer with a massive AI ecosystem. Each one plays a unique and absolutely vital role. Let's break them down.
First up is Micron. You see, AI models are incredibly hungry for data. And to process it all, data centers need huge amounts of specialized high-performance memory. That's what Micron makes. They supply this critical component called HBM3E. You can just think of it as a super fast highway for data that lets AI processors run at top speed. It's not flashy, but it's absolutely essential. As long as AI keeps growing, the demand for this stuff is pretty much guaranteed.
All right, now let's talk about the AI chip space. For what feels like forever, this has been a one-company show, completely dominated by NVIDIA. But now, things are getting interesting. A real challenger has stepped into the ring, AMD. And this is setting up a classic David versus Goliath battle for the future of AI computing.
And what makes AMD's strategy so smart is that they're not just throwing a new chip out there and hoping for the best. They have a powerful new accelerator, sure, but they're also building an open-source software platform to go with it. Now, why does that matter? Because it makes it way, way easier for developers and big cloud companies to switch over from NVIDIA's closed system. It's a two-punch combo that's turning a monopoly into a real competitive marketplace, which is great for everyone.
Our third company is one that you definitely know, but maybe not in the specific light. I think this quote just captures it perfectly. Alphabet, Google's parent, is a quiet but powerful AI pioneer.
Alphabet's AI roots go deeper than almost anyone's. We're talking about decades of groundbreaking research from places like Google Brain and DeepMind. But here's the key. For them, AI isn't some new, separate thing. It is woven into the very fabric of the products you use every single day. Search, YouTube, Google Maps. You add their huge cloud platform and their access to more data than pretty much anyone on the planet, and you have a competitive advantage, a moat that is just incredibly difficult for anyone else to cross.
Okay, so let's zoom back out. We've gone from the big picture market sentiment all the way down to a few specific companies. Let's tie it all together with a timeless principle for investing that goes way beyond just the current hype.
And really, this is it. This is the core lesson from this whole explainer. It doesn't matter if we're talking about AI, the internet, or the Industrial Revolution. The path to building real, sustainable wealth isn't about frantically chasing the latest hot trend. It's about finding those companies with strong, durable fundamentals. Companies with real products, real earnings, and a real foundational role in building the future.
So we'll leave you with this question to chew on. The next time some new world-changing technology comes along, and it will, ask yourself, am I just looking at the flashy, surface-level hype? Or am I looking deeper for the companies that are building the foundation, the ones selling the picks and shovels? The answer to that question could make all the difference.